You want an investment edge, but all you hear is noise, hype, and half-truths. Every signal is solid information, but only if you can see the bigger picture. This is where the Quasar magic happens. Weather, charts, news, all financial signals funneled into a single dashboard. Data alone isn't enough. Quasar Markets turns it into energy, sharp, clear, precise. Optimize with Quasar Markets today. Your edge when investing.
Good morning, Quasar crew. Hondo here with my partner in crime, like always, BigBeat, Stephen Orr himself. It's Friday, October 24th, and the market just got itself an early Halloween tweet. Inflation came in lighter than flared, but I know Steve's going to rip that apart in a few minutes. After a 9-day delay, the CPI report finally dropped, and it was basically, in my opinion, a Goldilocks print. Not too hot, not too cold. Markets are throwing confetti. Stocks and crypto are green across the board. Gold's glittering, and the U.S. dollar looked like it forgot its morning coffee. How we doing today, Steve?
Excellent. I mean, look, people have been clamoring for a rate cut, and a rate cut, and they're going to get the two rate cuts. I've been calling for two, and here we go. I think we're going to get one in each one. The Fed has been saying, look, they're data dependent. I don't know about I agree with this data. We don't know. I mean, let's be honest. With the government shut down, so what kind of data are we really getting? But
we already have issues with data, and now, in a less than opaque market. For sure. But it looks like Powell just got a hall pass from inflation detention, but don't get too comfy, right? We've got earnings fly faster than a Tesla robo-taxi on caffeine. Intel, Ford, P&G, Deckers, Comfort Systems, Target, and Coinbase all lighting up the pre-market. Let's dig in, Steve. What's getting you excited this morning?
What's got me excited this morning is probably the weekend. I'm excited about the weekend because, quite frankly, we've been waiting for the CPI print. We got it, and it's a whole bunch of nothing, to be honest with you. And that's why I'm tearing it apart, right? I just feel like there's nothing here that's making me excited about it. Look, 3% versus 3.1%, it's still inflation, right? And here's the problem. Guess what's up? Gasoline. Guess what's up? Medical. Guess what's up? Food. All the things that make people, right? All the things you need. Housing up. Look, shelter is still running hot, up 3.6%. So all the things, Main Street and Wall Street are not connected. I've said this for I don't even know how long now, and now it's being proven. So this is what I'm saying. Look, if the inflation is running hot for Main Street, not for for the average business out there, then there's a big problem, right? And it's okay. All right, you got what you asked for, and here it is. So, are wages catching up? Is housing still unaffordable? Yeah. Yep. So, this imaginary boogeyman of that we're going to tame inflation. What inflation? It's bad. It's terrible out there, and people. It's food. It's shelter. It's all the things I've been saying. It's here. So there you go, folks. Laid it out.
I will say the one thing we do have to put into this, gas, because of where it actually was. And remember, I was complaining about that. Oil was way down, but gas prices in my area were up. I didn't understand that disconnect. Well, it's funny that affected.
That is margin. That is businesses.
Yeah. Well, and I said that, but no one wanted to listen to me when I said they were price gouging.
They are price gouging.
Yeah, and that was up 4.1%. So something that I was looking that I thought was actually going to be holding us back and helping and sort of obfuscating some of the pricing went the other way.
And White House just said likely no release of inflation data next month.
Yeah, we're happy with what we just released, and we're just going to call it until we don't have to call it. Although, listen, I'm sick of the White House. I'm sick of the other side. As a moderate, I just listened to Hakeem Jeffries. This is, finger pointing's got to stop. We need some sanity, which I know is tough in DC as it is. But the market's wasting no time. Dow futures are 230 points in the plus. NASDAQ up about almost a full percentage point now. SPY up 63 basis points. Gold dropping down, but now picking back up 4,100. and I looked at the 10-year briefly. It had come down. It has come down a little bit back below 4. So, it is whatever we both take away from it, it's a soft landing on this print.
It is now.
Yeah, I mean, we have to admit the numbers in front of us. You tell me, play the hand in front of us, and that is the current hand. What are you looking at there, Kramer?
The White House is already pointing fingers again. Likely, when they say no release of CPI inflation numbers, I mean, obviously they're saying it's because of government shutdown. They're playing politics right now, and understandable. Look, but wouldn't you?
They're in the game of politics. I mean, that's what they're in.
Right. And tearing down the White House. But
listen, let's not get into that.
Okay. If the world is so great, if everything is fantastic, then you should see stock market push up higher here. People feeling better about it, right? And you're going to see that, I think. To me, it's all about psychology. Where's the psychology coming into this? Where do they feel? Where do people feel about this? And look, I probably will do what I said I was going to do yesterday. I'm going to trim all of my portfolio on the close here today. Mutual funds coming off a bit. You know what? I said this before the show, Howard, that I think I'm going to sit on the sidelines come next week. Because if we're still having low volume going into the Halloween week, there'll be some partying going on, some late investments probably coming out of the markets a bit. I'm going to take advantage of this. We said this before the show that the crypto space, I can't keep my eye on it constantly. Like it doesn't make sense to me right now. I just took Bitcoin and I put Tesla together in the same chart. It's the same damn chart.
Yeah.
So it tells me that
it trades with that's often the case on certain times.
So that tells me that algos are involved in this thing. So
it's about the beta movers,
right? And I'm not going to fight the machines. I'm not going to do it. We've been very good about what we're doing. We've been shorting Tesla in the mornings, buying Tesla. It's a good trader, right? And I still think so. But I can't fight the machine so hard. So if you think you can,
and the machine's got more money working than ever before. Hedge funds money under management hit $5 trillion.
Right, and I don't mean algos from the local retailer. I'm talking about the DA Davisons that are shorting the bit crypto. I'm talking about the companies that are out there that are just
the Citadels, the big boys, the market makers across all of it, and crypto.
The ones that are taking
Wintermute. Well, that's what I've been telling you. You've been asking why Bitcoin hasn't moved up, and I said because it's easy for them to make money the same way you were on Tesla, and they're just playing the fringes and the perps, and they're fine there. And that's the other part you got to look at is on crypto that I have to mention is it's a different. When everyone says it's not a different game, it is a different game, and what I mean there is that institutions, there's huge money in options. And there's huge money in futures that aren't retail. They are the institutions.
Right.
So that wasn't here 4 years ago. There was some OG whales. There was CZ. There was Sam Bankman-Fried. There was Justin, Sun. There's these guys that were moving markets, Arthur Hayes and others. But you now have much, and that's why that's why Alameda was able to make billions so quickly. Because they had algorithmic quant traders before anybody else in the crypto space, and they were able to arbitrage and just make.
And those guys are all in jail. So
yeah, but I'm just saying, but that they took advantage. See, that can't happen now because BlackRock's in the game and they're going to call foul, to that part. So, but you have a different world where there are already sophisticated hedges in place by these companies in these places that are different. And I will mention, for me at least, on crypto also, spot volume over the last 2 days, I mentioned it yesterday, needed to come back in, and it is bigger than the flows we're seeing on the perp side. So we are seeing the starts, the cracks of maybe this is the buyable bottom, but we'll see. We didn't really take off there. We fell right behind, back below key fib level here at that 0.382 fib. 111,300. So I'm more of a fader now from this point until back down to 108. Steve, you want to get into earnings a little bit? How about Intel? I know you are a fan. We need to get into that one.
I was a fan before Trump, before he knew about it, and I'm not now anymore. I think I like the company, but I think the price is over bought now. We're way out of there. Yes, they're right that the demand for Intel chips is way hot right now, and they do have a short supply. But the problem is, if there's not a supply to actually sell, I don't care how much you charge. You still got to make more to make it happen, and their distribution level is not up to speed. So until they get the distribution levels up, there's a problem here at Intel for me.
Okay.
Yeah.
I'll give you the numbers here. Third quarter revenue came in at $13.7 billion, up only 3% year over year, which when you compare it to most of the others, not really that great. They did have a clean beat over the expectations, though. EPS came in at 23 cents. They were only expecting 2 cents, so it's a beat, but not a real good one. They credit a rebound in PC demand. Enterprises are finally upgrading to Windows 12, and supply constraint means demand actually outpaced supply. Their chief financial officer, David Zinsser, said in a quote, "We're having a hard time meeting all the demand that's out there." So like you said, and when's the last time you heard Intel say that? So probably 2012.
Right.
They are guiding quarter four revenue in the 12.8 billion to 13.8 billion, which adjusts for their Altera divestiture. And don't forget, they've got NVIDIA, we'll try that again, investing $5 billion into their foundry operations, plus a U.S. government stake of about 10%. So basically, it's the government's new favorite child. So,
and I'm a fan of Lip-Bhutan. I mean, I think he's very smart. I think he's got it together, and I think he's ready to run with it. I think the problem is that distribution is still an issue, and I think that's what NVIDIA is trying to fix. I don't know that I would fix it by just investing in Intel. I think Intel should just partner with NVIDIA and AMD and say, look, you've got a better distribution. Let us make the new chips with you, right? Because our chips are not the same chips that you're building, right? And then that to me is what's different. NVIDIA making the video chips in the server side, Intel making the chips on the top side, Qualcomm making the chips on the bottom side, AVGO, put the two together. So there's and people don't really understand how the chip world works. They're just like, oh, it's chips. We need chips. Yes, we do. But different chips use different parts, and you need to understand where they're sourced and how they're made. And there's a lot of cool, interesting things to that. So that's why some chip makers are doing very well and some are not. It is AMD versus NVIDIA, but not quite the same. But the world's not going away when it comes to content, building content on social media and YouTubes of the world. So NVIDIA is very important. The server side of the crypto side for NVIDIA is very important. AMD knows that the computers and iPads are not going away anytime soon. They're being made, yes, and they're being made with glass and they're being made with different substances. So they got to make better machines and better chipsets. So who comes out on top? That's what I want to know. Tell me when you have when you got foldable phones now. So the chipsets that have to be run hotter, we already know that. We know that on the back of the iPhone, right, that they have this thing now where it's dissipating heat. Why? Because the chips are hotter, right? So there's a whole lot of things that are going on that we got to understand the chipset sector. So that's why I think you're going to see a TSMC do quite well here. They do very well, and they're doing it not in the Apple phones and everything else. So I think you might have a big winner, and I think Dan Ives might be right with TMC. He's been right so far, and we played along with him, but he might actually be longer term even better than this.
Sounds good. Let's shift gears literally to Ford, ticker F here. Third quarter sales came in at $50.5 billion, another record. Operating profit $2.6 billion, well ahead of consensus, but there is a catch. They trimmed full year guidance due to a fire at one of their key aluminum suppliers in New York, estimated to cost them about $1.5 to $2 billion. That's a smoky situation, pun intended there. Despite the hit, Ford said it's planning to boost F-Series production by 50,000 trucks next year, adding 1,000 new jobs. That market's loving it. Shares are up 3.5% this morning. You getting a new Ford, Steve?
No, but I will say I like the Ford product. I think it's strong. I think it's strong in the South, where I'm at, and I think you're seeing
And
that.
right where in the Midwest where I am.
Yeah.
Yeah. Yeah. F-150 demand never dies. It's America's, national pickup truck. And if yields keep easing, auto credit improves maybe, and Ford gets that EV margin drag under control.
Yep.
We could actually see them break out of that $15 ceiling that we've seen them locked under here. So,
Agreed.
okay, consumer staple time, Steve. Procter and Gamble.
I mean, you wrote it out there exactly what I've been talking about for how long? The K-shaped consumer story. Yeah, it is what it is. Interestingly enough, everything and everybody uses Procter & Gamble every single day in their house. I don't know what it is that you use in your house that's Procter & Gamble, but the Procter & Gamble's list of things that they have is just asinine.
Yeah.
They own everything that we do, including Bounty and Tide and Gillette. Do you shave? Yes. Do you use Gillette? Yes, I do. Do I have Tide Pods in my house? Yes. No, I don't eat them. Bounty, Pampers. I don't have Pampers. Do you have Pampers in your house?
Not even, well, we probably still have some around, but no.
Right. And of course, things that like probiotics, which I think is a big deal right now with diet pills and diet everything pretty much, including the shots. They've also got like Loves, they've got Bounce. If you don't like Bounce, you like Downy, you like Tide, what you pick it out, they own it, right? So it doesn't matter which one you do. You like Tide? Nope. You like Gain? Nope. Okay, well, they own both sides of that, right? So there's a lot of things.
The food industry is the same way. If you go through the salad dressing aisle, and it's like three companies own all of it. It's just all hidden under different sub brands. But yep, consumer staples. Company turned in an EPS of $1.99 at about 10 cents above estimates in revenue, 22.39 billion, 40 consecutive quarters of organic sales growth. That's 10 straight years of never missing the grocery aisle, like you said.
Well, if inflation continues to go up, then they're not going to miss, right? Yeah. I mean, they're going to continue pushing up. So there you go. I like Procter & Gamble. It's, obviously it's one that you own as an investor. You just own it till, because you think that the markets, but they had a nice run during COVID, and we're peeling some of that off. But the truth is, no, the Procter & Gamble is it's America's company. It's the products we use.
They did describe a K-shaped consumer, rich shoppers buying in bulk at Costco, as I said, lower income households rationing detergent like it's 2020 toilet paper. Beauty and grooming were the bright spots. Olay and Gillette did well. Fabric and home care were a little sluggish. And the K-shaped economy means one shopper is buying a family pack of razors. The other is reusing one blade till it resembles a butter knife, Steve. So that disconnect between Main Street.
And I'm that guy. I mean, look, I'm not a stock. I'm not a prepper. But I've stocked up a little bit. I don't want to be in trouble like we did the last time, right? So I understand that. And you know what? I don't go to Costco. I go to Sam's Club. So,
Well, my wife's a Sam's Club person herself also. We are 10 minutes from the open queue, still moving to the upside here, up about 96 basis points. SPY up about 70 basis points. Not at the highs we saw on the CPI data release, but they are moving back in that direction. VIX very much down at around 1642 here. You're getting close to the area, in my opinion, you would want to look to reload into that trade if you are out of it. Gold skyrocketing up 41.16. So CPI data, it's got gold back. It's got the gold bugs back out in force. Same thing. Silver moving the same way. Crypto, not the same result. It made its first move to the upside, now pulling back a little bit. If we look at the DXY back below 99 here, we'll have Mr. Flanagan on in a bit to break that down for us. And the 10-year at 3.99, coming off the lows of the morning, looks like it wants to break back above 4. And up next, Steve, we have shoes, Decker. They are down about 13%. I got a little mood killer here. The maker of Hoka and Uggs earnings actually beat. EPS was about $6.30, up about 20 cents, but their full year guidance came in light. Stocks down 12%. Looks like investors tripped over their own shoes. They're blaming macro uncertainty and soft discretionary spending. Basically, consumers love comfort, but not at $160 a pair. You can't sell luxury slippers when Target's laying off 8% of its headquarters. You buying the dip here on Decker?
Nope. Because I don't buy Uggs and I don't buy Hokas.
Yeah, well, I don't, but I've heard great thing about Hoka.
Sure, I do. I have too, but I'll tell you what, Nike makes a great shoe, and they're making some.
Yeah, I've always been a Nike man. I'm with you there. It's fun,
I have Nikes and I have Olakais. And to be honest with you, you know me better than anybody, Howard. I don't like wearing shoes anyway. So
flip-flop guy, yeah. So
I don't even like flip-flops if I can help it.
Yeah. Okay, next we're going to go a different direction here. How about some Comfort Systems Fix, FIX, up 16 point, just went below 16, and up 4% in the post-market yesterday, so up almost 20% since their earnings came out. The HVAC powerhouse that no one talks about until they post numbers like this, right? I thought they were a shoe company or a consumer product company until I got a little further into it there today. What do you think there, Steve? HVAC, you buying that?
It's going to be a cold winter for up north, so get ready. The numbers are coming in. The National Weather Service is already predicting that as best they can. Obviously, they're not working, but I can also tell you that the numbers and models that I'm seeing, it's going to be an unusually cold winter, and natural gas is going to be one of those beneficiaries. And because the cost of nat gas, I think what you're going to see companies like space heaters, places like that make these things are going to be doing very, very, very well here coming up.
And they said they are the beneficiary of the reshoring wave. Every new chip fab and data center needs climate control. So in a way, they're the quiet winners of the AI build out. And if you remember when NVIDIA announced their partners on all their data centers, I pointed to the HVAC with them. It was Carrier, their partner.
Right.
That is a channel check there. Call it the sweat-free trade there, baby. Make money on air conditioning.
Yeah, and a good example of that would be yesterday would be Honeywell, right? HON. Yeah. So, I mean, I've been calling for nat gas to push higher here. That's what I think is going to happen.
As an old man, one that I don't talk about much anymore, Steve, student loans, baby, ticker SLM, Sallie Mae, up 10.74% this morning. Company raised full year guidance and juiced its buyback program, which has investors cheering louder than a kid who just got his debt forgiven. They did miss EPS by about 20 cents. It came in at 63 cents, estimated 80 cents. But that buyback offset it. Stocks up 9%, 10% now.
I can't touch Sally, Fannie, Freddie, none of it, because you don't know what the president's going to tweet about and do. And it's literally you'd sit on pins and needles trying to invest any of this stuff. And remember, this stuff, especially Fannie Mae, FNMA, actually went away, right? So you better be very careful and know what you're doing. And trust me, as somebody who actually knows lots of people at Fannie and Freddie, dear friends that worked there many, many years, I can tell you they don't invest in it. They can't, but they say it's uninvestable. So I would be very careful, folks, if you're out there investing in Fannie and Freddie.
They made it into a beautiful Wegmans.
Yeah, for those of you who don't know, Fannie and Freddie are set up on the hill in Georgetown. About
they used to be.
Yeah. They're not there anymore. So
they sold that land off, and it is now a beautiful Wegmans grocery store that I used to
I
shop
haven't been
at.
to that Wegmans.
I still shop there when I go back to the condo. That's where it's near, right there. That's
all right.
That is my closest one there. So, yeah, I don't have much to say there. And again, you want to talk about government-influenced companies, as Steve said.
That's one of them.
That's the train for it. More good news, though, Steve. I got to stick there. Green energy time. You talked a little bit about it yesterday with solar, right? Next tracker here. Solar tracker manufacturer just delivered a big beat, raised full year revenue guidance from 3.27 billion to 3.47 billion. Also announced a joint venture in Saudi Arabia to accelerate solar adoption across the Middle East. That's a huge expansion play. Stocks up, like I said, 14% between last night and today. Classic rate sensitive green energy trade. When yields fall, renewables rip. What do you think, Steve? You buying it?
No, but because I don't think the president loves oil and gas. We just saw them opening up more in the Arctic wildlife, unfortunately. So no, I'm not a big fan of there, but I will tell you that, and there's no one to advise the president right now. The people that are inside the Oval are not advising. And I know this is a kind of a tangent. It's kind of a weird tangent for a lot of people to understand, but those advisors like Booz Allen Hamilton and companies like that are getting slaughtered today as they realize that they have no pressure on the White House. So as lobbyists,
can you? I think maybe breaking that down for everybody might be pretty good here.
Okay, so inside of DC, we call it K Street, and K Street, the lobbyists have several firms that are on K Street. One of those firms is Booz Allen Hamilton. Came in with bad numbers. There's other companies that are in DC like that, but Booz is the most forward-facing. They're realizing that they don't have the pressure and power that they have in the White House, and people aren't buying them to invest to be able to lobby them. So the pressure would be solar. The pressure would be foreign firms. The pressure there's no pressure on the White House. They don't. It's a no care policy.
They don't have any influence. When you say pressure, they don't have any influence within the current White House.
It's right. They have no influence, right? There's like a few companies in DC. I do know those ones that do have the influence. I won't mention them here for obvious reasons.
We call those the Beltway Bandits. They basically base their business around federal business. Steve and I have lots of friends throughout that industry. Yeah. Without a doubt. We are about 1 minute from open here, so we'll get back into it. We'll still talk later about Target, what's going on there, Newmont and the gold miners, and a little bit about the connection between Google and its new partnership with OpenAI. So
okay, we're very close to opening. I know what I want to do. I know what I want to do with Tesla. Everybody knows what I want to do, so I'm probably going to do it. So
I'll pull it up on the open here. It is down before the open.
It's kind of sucks because they're beating me to it. Because I was going to do pre-market stuff, but I try not to because just the volume and the spread is just too wide, and the way that I trade. So it is open now. There is Tesla to the upside, and I am now short Tesla. Let's see where I got in at. Do the orders there. Tesla, 448.20.
First move on the queue is to the downside here, up about 81 basis points. SPY, same thing, up 64. Bitcoin drops below that key, 111.350. I'm watching today. Same thing, Ethereum's got to rebuild to over 4. That's a pretty basic line in the sand. Let's see what Steve's Tesla's doing. Looks like it's moving to the upside to start off with 450.
I'm trying to short more here now. Yeah.
Okay.
Trying to move as fast as I can here. My fingers are
back into it here. It's very volatile so far, like always. Tick is slightly positive. Advanced.
I can't do this. I got to get out of this. This thing is so awesome for me. Buy to cover right now. I already did it. So let's take that money and run. Oh, look at that. Look at that beautiful short there.
The downside. There you go, Steve. Tick's gone slightly negative. Advanced decline opens up almost 4,800 to the upside here. So nice win there. Hey, everybody, do us a favor. Hit the like button, follow button, share button, all those fun things. Help us reach more traders. Steve, nice trade there. Tick does pick back up positive after that.
Hell of a trade.
Jones up about 50 basis points. SPY up 60 basis points. Q now up 76. Moving back to the VWAP here on the Qs. MAG right now, we see Tesla down about 70 basis point. Netflix down another almost full percentage point here. So Netflix continuing to move to the downside even after the weekday we saw yesterday. And this is now the third straight day since their earnings on onto the downside. Nvidia on the other side of that up 1.2% here. Nice little rebound trying to get to 185. Apple continues to climb back towards its all-time high here, now within $4 of that. Microsoft up slightly here today. Google, again, on news of a partnership with OpenAI.
I think it's a great partnership for them, to be honest with you.
Up about 1.4%. Amazon rebounding here, the one that's still the funniest to me. It's having such a great week after it took down all of the internet earlier this week. Meta up 50 basis points here. Steve's Tesla, he should have stayed in because it's down now almost 74 basis points. And Netflix at 55 basis points. Sectors of the S&P outside of XLB, which is materials, down slightly, and XLV, which is healthcare, down. Oh, and healthcare just popped positive. So it looks like all of them.
I'm actually going to try to short Intel here if I can.
Okay, let's get over to Intel here. That should be on the sheet.
I am short Intel now. Let's see where I'm in at. Yeah. 40.46 is where I am short. I have an oversized trade there, and I'll probably take some of that probably off pretty quickly, though. But
and again, Steve, shorting Intel here into the pressure it's facing at VWAP. So we'll see what we get there. VIX at 1642. Like I said, if that pulls back just a little bit more, I would be interested in going back into a covered call type thing.
I took it again. That's nice. And I might just be sitting on the sidelines after this. That's 24 trades in a row that I won. So those of you who are keeping track at home, it's pretty good.
That is, can't beat that. Let's see what we get here across the markets.
Although Intel's there goes Intel to the downside. So it's okay. I was oversized on that one on the short. Oh, look at that short still going in. Yeah, and the Q is going up. So that tells you that Intel's probably found its top here. So yeah, Q is going up, Intel going down. That tells you everything. Wow.
There you go. Tick still up about 100, 200 here. Advanced decline now at highs of the day, 48.87. Dixie is climbing up, or at least finding a bottom here. We'll have Mr. Flanagan in about 10 minutes to bring us all the news around the dollar as it is. Dow Jones up 57 basis points and breaking to a high of the day. I would not be surprised to see a new high on the Dow today. It's within 100 of it, so that's not a very bold prediction. We have hit a new all-time high on the S&P, so 677.06, Steve. We keep setting new all-time highs. Same thing, Steve. NASDAQ, another all-time high. We keep grinding to the upside.
I remind everybody to keep reading the book 1929. It's the same thing. Oh, thanks, Doc Spector. Appreciate that. Yeah.
How you doing today, Ida? Hope you're having a great day. I know who that is. VIX at 1629 here, like we said. Bitcoin not really catching a bid, falling back below that key level. Same thing, Ethereum under 4 does not keep me happy. Stocks in general, though, look like they are moving to the upside. Don't see many laggards.
Here's a good one for you. Apple up and APP up 3.3%. That's
yeah. I mean, almost everything on the watch lists are to the upside.
AMD is now up 6% here on the day. I think that might be
up 6%. Your TSM you talked about earlier up 2%. Yeah. AVGO broadband up 2.54%. Intel up 6%. So that price is actually holding while you scalped it to the downside. It's holding up for itself.
Yeah,
pretty well so far.
AMD might be setting up for a fall here. Although I've done pretty good here this morning. I think I'm going to sit on my hands a little bit here.
There you go.
Hey, look at the numbers here, Howard. 1,800 already coming in.
I love it. Again, if you guys would share, like, follow, all those things help us out tremendously. Most of the crypto stocks up. Steve, been seeing more and more talk, and it's true, about the disconnection of crypto mining companies and the Bitcoin price because of their dive into the AI connection. So like Coors, Riot, Clean Spark, Iron, TerraWolf, while still, a play within the crypto space. They've hedged their bets, and they also have the AI to fall back on. So I love it. Tick still up 300 here. Dow Jones, everything moving. Q's now up 1.1%. So things are moving to the upside so far.
You know what? I've got to, and I think I said this earlier. I'm going to start to peel off. Look, I like selling on the highs. I don't like buying on lows. I like buying on lows and selling on highs. So here we are, right? And I like this. I think I might be sitting here in my portfolio later this afternoon and selling, taking some advantage of this. I love this selling.
Yeah, you can't take it,
It makes me happy. Glad to see that new correction in the Social Security. They're getting a bump there, and I like that. That bump for senior citizens. They need it. They need it because of inflation. About 2% there, 2.8%. Q's now on the highs of the day there, Howard. But Bitcoin,
like I said, yeah. I mean, it definitely.
Bitcoin's not participating, which is pissing me off.
Yeah, like I said, I also will warn everybody, don't get too nervous when Coinbase does not work tomorrow. It is a scheduled maintenance for 4 hours from 4 a.m. Pacific. They're based in Silicon Valley, so they use Pacific time, but they will be down for about 4 hours. I do not suggest being in an active trade. Your coins are safe during that time, but I will not be trading. In fact,
but they will be taking advantage of it. So people will be taking advantage.
And somebody moved, and that whale that's connected to CZ loosely moved a large amount of money to Coinbase, and a lot of conspiracy theories, there. But I will say that's also a two-way street. That same person could long the market that shorted it last time. So while history will probably repeat itself, it doesn't have to repeat exactly. So we'll see what we get there, but just want to warn people because it will be a scheduled outage. Small caps up 1.48% here, Steve. Market continuing to move to the upside in general.
Point here. I mean, that's a big order just went through. Look at that big order. Look at the volume.
Yeah, the sell-off. Yeah, we get downside to 108 for sure, without a doubt. 106 below that. But again, like I said, the good news is, to me, we are starting to see the spot volume, pick up. But this sell-off's pretty.
Yeah, and I'm ready to go. I'm prepared in the back end. I'm ready to go with, if we go up, great. If we go down, even better. I'll buy some more. I'm prepared for that. Right?
That's our philosophy. Also, but be patient while that's the case. You can scalp, but that'd be about all I would do. And we do see a lot of these, again, not a huge swath, but where this watch list was almost all green. We are seeing a little red kickle in here. Tick has moved down to fairly neutral here. Advanced declines lost about 100 off of it. So a little bit of profit taking here as we're now 10 minutes into our cash market trading. Bitcoin continuing to fall a little to the downside. And the one thing that is a problem is we are still seeing, the retail trader it's a crowded long trade across the perp. So they haven't capitulated yet. So it gives room to those whales. VIX down to 1631 here. See if anything else is hitting here. Not really.
Oh God, Maxine Waters says that on CZ pardon, Trump is doing massive favors for crypto criminals.
Yeah, and he is, and that's what they all do. I mean, that's one I can't get too mad. Like I said, if he pardons SBF, then you're going to see me start to get angry. We didn't talk about Coinbase, Steve, but two things. Number one, up about 5% today on calls again. More analysts over 400 there. Big news yesterday that sort of came out. They bought an ICO company, but not the old style ICOs that we think of from 2017.
I haven't heard that word in a while.
But a regulated token offering company that allows for compliant token launches. So
Okay.
they're going to roll that into that super app that I've talked about that Coinbase is looking to be. And when I say super app, what I'm talking about is that the SEC has carved a sandbox where you can start to trade, companies can start to look to trade stocks and crypto and other things all in the same place, where the move that fintech's making into the next generation here. So pretty positive and it's hitting well. And a lot of people don't know how big that ICO part can be, because what have we heard so much of? That companies want to launch tokens, right? They want to put stuff on chain. So this would be, again, if you wanted to launch even a security token or the version of a stock that you can do in a tokenized way.
Yeah.
Tick is -3 here, so we are starting to see a little bit of kink in the armor. It looks like those algos ran it up. Retail's not necessarily following so far, so I do think we got a little bit of wariness. Hopefully people are listening to us, and that is the way they're looking at it. What are you guys, traders, what are you doing today? There's 2,700 of you watching us right now. What are you guys doing today? You going long, going short, taking profits? What are you doing today? And what's catching your eye so far? Let us know.
Oh, I can't believe I'm doing this, but I think the money's just too easy here. AMD on the highs here.
Steve, we'll say some of the high flyers so far today. Legends Corp, one of the newer offerings out there, up 13.82. Fluence, who had gotten really beat up, the energy company that went skyrocketed last month and then took a pretty big fall, back up today. Open Door, so meme stocks back in play today, up 10%. Next tracker, we talked about solar, back up 9.29. I mentioned some of the Bitcoin mining companies that have decoupled from Bitcoin itself. BITF would be one of those. Bitfarm, SIFR, which is Cipher Mining, would be another. We do see also STRL, Sterling Infrastructure, up about 8% here. Crypto names again, TerraWolf up 8.31. EOSE, which we know another solar name. EOS Energy up about 7.52%. IREN, Iron up 7% here after a pretty big pullback there. So again, nice move to the upside. Seeing some of the software names punch back a little bit here today. ScanDisk up about 7.24%. Nibius Group up 7%. So we do have some high flyers. AI names, Pony AI up about 6.42. Steve, you mentioned AMD. Did you do anything there? Up about 5?
No, I didn't touch it. I'm looking at Tesla again. I think it's
looking at Tesla. Okay, there you go.
Tesla could push back up here.
If we're looking for laggards on the other side, their Decker on their bad earnings is down about 13%. A couple of the therapeutic names that I don't touch. Newmont down 6.83% so far. VeriSign, you've talked about it, Steve. Not many people use that anymore, down 4.85% here on their earnings.
It's over pretty much, yeah.
Yeah. What else do we see
Bitcoin
here?
still struggling here. That's somebody really shorting here. That volume is just really nasty, and yet Ethereum is up.
Well, Lido's down about 2.76. It's getting to a spot where I sort of like that, Steve. Defense, whenever it gets beaten up, it does bounce back. We know that.
You know what? I think, Howard, I'm going to buy some Bitcoin here.
There you go. Get the market moving for us, Steve.
I like this sell off in Bitcoin.
Okay. I personally would be targeting 108,490 or so, but right around that 200-day MA that has been its solid support here. Although we don't want to test that again.
And I just picked up Bitcoin here. I like this buy here.
I love it. Qs are up 1.11% at highs of the day, moving to the upside.
Pushing back up. Look at that.
Same thing. SPY, same thing. Nice move to the upside here. Dow Jones up 86 at highs of the day. So you would think it's full Bitcoin with it.
My number's coming at 52.2 here versus 52.0. Services PMI coming in at 55.2 versus 53.5. That's huge, guys. That's very good. That means that, yeah. Pull that up there. Andre saying, yeah, Tesla's looking really good for next week. I think so too. It's good to trade. I don't know if it's going to be upside so much because as it's hitting, I think Elon was crying yesterday about his pay. That was interesting to me. But yeah, there we go. Bitcoin. I like that.
Consolidating in a little spot. It is like I can't argue with that call. Bitcoin bouncing right off the one standard deviation to the downside on the VWAP here. That should be a fairly solid support level. Let's see here. I'll tell you what I'm seeing.
Coinbase just got upgraded to overweight.
I told you $400. Another. That's like the third analyst above it. That's what I was talking about just a second ago.
Yeah.
They've got a lot of good stuff going on.
Yeah, I think I'm gonna sit in the sidelines for the rest of the day. I think I've done fairly well this morning here.
Absolutely, sir.
Yeah. Sitting on my hands is a very hard thing for me to do, ladies and gentlemen, but I do it, and it is a trade, and it just paid for my weekend, so I'm good for that.
There you go, party. Coinbase now up 5.65% today, so nice, real nice move to the upside here. Copper, for those that are in that with us, up a little bit here today, now up 14% from what we called that.
Bitcoin still slipping a little bit here. I'm not too scared about. I'm not scared about Bitcoin.
I'm be scared about it, but it's just it might take you the weekend to get out of that. Not that you're trying to get out.
I'm trying to go to December right now. That's what I'm trying to do.
There you go. Yeah, absolutely. Galaxy Digital up about 4.92% here. That's a good sign. Again, the crypto stocks are all performing better than the crypto itself right now.
Yeah,
shows you the disconnect, in my personal opinion.
Yeah, Andre is talking about. He says he's shorting all alts. Sorry about that. Shorting alts. I agree with that. Yeah, I do like Solana. It's one of my faves. Which is holding up here, but yeah. Yeah, with the S&P hitting all-time highs, I have to look at myself and go, you know what? I think I'm gonna take some profit here.
There you go. Can't never get mad at taking some profit. That's for sure.
Hey, just want to say thank you, everybody. We just now hit 3,700 people out there. I appreciate that. Thank you so much. We're growing. The company is growing at leaps and bounds now, so I appreciate that. Check out quasarmarkets.com. We got some crazy, awesome programs coming into the platform, and come January, this will be a completely different ball game here, as we got lots of very, very large things coming, and we'll talk about that here in the coming month or so. But things are moving very fast here at Quasar Markets. I've got some great partners. We'll talk about that just yet, but ladies and gentlemen, get ready because it's going to be a game changer. We love it.
Speaking of game changers himself, the man, the myth, the legend, Stephen Flanagan. How are you doing today, buddy?
Yeah, I'm doing good, guys. How are you today? I love the show, and great news, Steve. Great news on the numbers.
Yeah, it's great because it's stopping the noticeable changes at the White House, where the man is destroying half the building. So talk to me about. Is it look this way, not this way, Steve? What's going on, man? Come on, talk to me.
Yeah, well, look, think about all those new construction jobs in Washington, D.C.
You always have a silver. I love it. I love it.
Man, you are. Hey, he needs a good spin doctor. Although Miss Levitt does a great job herself. So, but you could be her sidekick.
I love it. Steve, talk to me about the market.
That's the deep water, guys. I ain't touching that.
Talk to us, Steve. 99 Dixie. What we got here? 90. Right now we got 98, 95. We're struggling there at the 99 handle on Dixie dollar. Currencies, I'm very happy with Jap yen falling a little bit even more. Yay. A lot of sushi and sake here in a few weeks.
Yeah. So let's start off dollar index 98.90-ish. Last week's close, 98.54. We talked on Wednesday. We were right on top of that close. I said, this is like a no-brainer here. go long, you have a 10, 20-point stop loss. Likewise, we're setting up for a nice close. The only disturbing part here, and I think, again, with my theory here, we are in a positioning shift era, not a macro shift. So as many of the narratives about how negative everything has been, underneath of the line, it's not a narrative shift. It is a positional shift. Why is a big positional shift decide to hit this week? Because look at all the interest rate changes we have coming up next week. You know, the whole landscape, the tectonic plates under the financial markets are global interest rates. And you've got a setup next week for starting off on the 29th with the Bank of Canada presently at 2.5%, then followed by the Fed at 4.25%, looking for a possible rate cut by the Fed of a quarter. BOJ right after that on the 30th, which will be midnight our time on the 29th. They're at 0.5%. I do not expect a change. ECB comes on that next day, the 30th, and they're at 2%, expecting no change there. So, you know, a lot of things going on. Steve, you like the weaker yen? Well, Japan's mulling more bond issuance.
That's true.
To further help their extra budget of stimulus. Like, I like the stimulus, but Japan is running 230%, 237% of debt to GDP ratio, highest in the industrial world there. It's, you know, at what point do we begin to ask about Japanese debt, which is, you know,
are we going to compare their debt compared to 38 trillion of our debt?
Our debt is only 24% of GDP.
Right. Yeah. Mm-hmm.
Big difference there. And year to year, fiscal year to year, our debt is lower.
Is Japan in trouble?
Japan is not in trouble because I believe they are well on the course of making a shift into this high-tech world. And I think the new prime minister is going to lead them. So, but if I'm looking at dollar yen and based on that debt to GDP ratio, I got to keep that in mind that I think I'm looking to be short the yen.
Carney just said, Canadian Prime Minister Carney just said, we can focus on new partnerships, including with Asia. That's huge because we're Canada and the United States. It's the biggest trading partner. Did Trump make a mistake here?
No. Canada, you know, can do all the talking. Carney is a great politician. He's a central banker. You know, what he's going to miss is the simplicity and the points right here in front of him. Make a deal with the U.S. It's not a hard thing here, and everything is going to be great. You know, I'm not, you know, at this point, the Canadian pride seems to be more in the way of getting an agreement than anything else. But I do like, if you look at the dollar index here, you've got multiple tops here on Wednesday at 99.14, Thursday 99.14. Hey, and we just talked about that on Wednesday at that 99.15. That's the big break point. Today's high 99.10. So for me to see further upside to the dollar, I got to see the dollar index get above 98.915. And then we're setting up a 99.60. I do think initially we can test above 100 before I'd look for a pause here.
Yeah, S&P making highs. Q's, you know, made a high earlier today. Markets are on highs. Mostly gold and silver are still pretty high comparatively. Obviously, we're seeing inflation sticking its ugly, rarest ugly head, still up 3.1, not 3.2, still high. Where does this all pretend? What's got to give here, Steve?
I think that, you know, what's the Fed statement? Is it still going to be dovish, or are they going to say, hey, we're going to cut the 4% and hold? The Fed is restrictive.
The Fed can't say they're data dependent, right? Because there's not much data to go on.
What data? Yeah, what data?
Right.
So, but you remember Powell in his last speech did say that they have very good underlying data. I got to scratch my head on that one, because if that's the case, why are they so far behind the curve here?
Right. I
But,
agree.
Ahead of next week, why would you want to put on more risk on a Friday ahead of weekend risk right there, with the Ukraine-Russia still seemingly out there? Now you've got a trade issue with Canada suddenly thrown down. Carney can say he's going to move to Asia and other places and other markets, but that's not going to get done tomorrow. So, I look at, you've got a little bit increased weekend risk. I wouldn't be putting new positions. I'd be sticking and jabbing. That's the way I like to trade in this type of market. Stay focused, discipline. Timing is everything here. But I would like to come out Monday and see how no weekend news. I would like to put risk trades back on. I think next week you could see, a further play to the upside.
Okay. I mean, but what do you say to people like myself that said, you know what, we're on the highs here. What's wrong with taking some profit here?
Nothing at all. Nothing at all.
All right.
Taking profit and recirculating your funds is an important part of trading.
Yeah.
And when you're at new highs, I always come back to my institutional side, look across the trading room and say, what's everybody's position? And you're at new highs, and you've got to, if you say I'm long, okay.
That's ballsy. That's ballsy to say I'm long on the highs.
It's easy to say I'm short here because we're at highs, and I think we're making a top.
So I always, you and I talk, because we're institutional as well. When I say path of least resistance, what is the path of least resistance? The upside or the downside?
The way the market's trading, and I study price, that's my forte.
Yep. Yes, it is.
Price tells me everybody goes short at the tops, and then it makes a new high, and then you get all this new buying to come back in to cover my short.
Okay.
Because you can't just sit short in this market. You got to time it perfectly. Because if you are short in a bull market, which we are in with some pretty nasty corrections.
Yeah.
But if you are short in a bull market, you got a lot of explaining to do when it makes a new high at the end of the day, which was above, and Thursday's high was the low now. And so it's constantly trying to explain why I'm not participating and getting involved with this move. So I think that's what funds people short the top, and then they have to recover as it makes a new high. Ahead of the weekend, I would be taking risk off. I think that's the prudent way to be trading right now, because
I'm doing right now.
You're not cutting your core.
Right.
You're taking. So if it goes up on Monday, you've missed nothing. You're still.
So I asked Ray Dalio what percentage should be in gold and all of that, and talk to me. What should I be peeling off? I'm peeling off right now. Most people don't know. I'm doing it while I'm talking to you. I'm peeling off. What is it? What percentage of my portfolio should I be protecting it with? I'm taking 10% off.
Yeah, I think 10 to 20% is is a very effective hedge. When you go above 20%, now there is there's some ripples in the water that you are seeing. But 10 to 20% would be a normal type of hedging position, especially on a Friday. Yeah. I kind of use the 10% level, and when I'm feeling a little negative, I'll inch it up to 15 to 20% on a Friday, and then I'll trade very early in Asia and quickly cut that back off. But in the event,
Michigan consumer, the Michigan numbers just came out, which is the only thing. Michigan expectations came in at 50.3. The forecast was 50.9. So bad again, which means that the Fed's going to be cutting, right? I mean, the consumer sentiment right now is 53.6. Was expecting 54.5. So consumer sentiment's down again. Yeah, I don't know, Steve. I mean, you saying 20% scares me a little bit.
Again, Steve, the geopolitical risk in the world is still out there. The Michigan survey, I hit Howard in the midsection here, right in the country, but I never follow the Michigan report. Right. To me,
listen, in Ohio, we don't look highly on those folks up in Michigan. We don't use the letter M.
Illinois, we don't like Michigan either. Yeah, I guess.
Yeah, so neither does Steve. So you're not going to insult me at all. They don't know what they're talking about.
All right, I just find Michigan University, I don't follow the academic side of the market
Yeah,
very
David
well.
Portnoy is from there, so I'll listen to
But
Barstool Sports.
you know what? You mentioned all the time that the Fed is a very
Academic.
educational, academic level, and they are following that.
Which is why I'm not a very big Fed supporter. I am 100% behind Fed independence, definitely. But I am not a big supporter of the Federal Reserve governors. I think they're too in academics. Just let's take their recent history. You know, tariff equals inflation. What, 3 meetings ago was the mantra. And now they're all going, well, it's going to be a protracted period of time where inflation comes out through tariffs. And, they just keep missing the boat.
And as you say all that, Steve, I just want to thank everybody out there that's watching us. We've hit another new high here at Quasar Markets. We're now at 5,300 of you watching us this morning. It's a new high. So we appreciate everybody. We're growing very fast now. We appreciate everybody out there. Thanks. Subscribe, like. Go to quasarmarkets.com. I mean, this is not the normal place where you go to hear Talking Head. We actually bring the real people here. You can talk to us. You can ask us questions. It's not always about charting because I like charting, but it's not. There it is, Buckeyes. There you go.
We need That's right. OHIO, baby.
All right. Well, look, for the viewers, let's keep. We're talking currencies. Currencies. Money moves first in the world. Keep the dollar MEX online. I'm beginning to get a little concerned here. We're at 1838.
I got it right here. Hold on 1 second.
Yep. And last week's close was 1837.10. Trump throws the gauntlet down against Canada. Mexico, we still got to get something in the cards here with Mexico. That is our largest trading partner. And I'm a little concerned. Mexico at 7.5% interest rate. Let's look at the world. You don't want to invest in Europe or China or Asia. You want to look at North America, okay? So if we look at North America, you can be in the dollar or in the Canadian dollar or in the Mexican peso. Mexican peso at times can be one of the third largest trading currencies in a $9 trillion day. So it is a parking lot for funds that don't know what to do. And it just parks at 7.5%. Where else can you get a high interest rate like that and a fairly stable currency that appreciates? But watch that, because if the parking lot, if the dollar MEX begins to trade up much through the 1841-42 level, a lot of that money is going to have to escape, because you can't leave it sitting at 7.5% and lose on the currency side of as the rates move against you. And if that begins to happen, that's a lot of money that could pour into this U.S. market as that trade gets a little unwound. So to the viewers out there, I love to keep currencies on my desktop while I trade any other asset class. I look for where things are oversold. I look at crypto right now as being somewhat oversold off of its highs. Steve, I heard you jumped in there and dipped your toe back in that water. That's the way you have to trade these markets, because if you begin to see things move like the Mex peso higher, watch where it's going to go, because that's where you're going to get the tip of the move, and you want to get swept up in those type of moves.
Yeah, and a lot of the stocks that I am not selling off on is my dividend appreciations, my international, because I think that I'm buying a lot more Asian stocks, mutual funds in Asia, because I think the money's moving over to Asia again. I think that a lot of the countries are not happy with our trade policies, and they're just going to Asia and saying, I'll buy the Chinese stuff. I'm also moving a lot of money into, and we talked about this last week, materials. I've done very well over the last few weeks. So I think there's a rotation here. But speaking of currencies, what rotation are you seeing?
I think that there'll be a lot of interest in Japan, especially if you get another stimulus package to come out. I do like Japan. I love China as well, but China, I have a 3 to 6 month horizon. I don't want to get caught, because that can be a rat trap, and and those type of things we call roach motels. You get in, but you can't get out, because it's a controlled currency. Okay. You can't even trade in the currency domestically. You're on an offshore currency. So that's a tough one. I do like it. To be open, I'm in a DRGN fund, an ETF, which is
Yep.
high tech investments in China. I like that. China is starting a China first policy as far as technology goes, and why not? So that is a good area, Steve. I think you're absolutely right. South Korea is another good one that probably is a good investment. But I still would say if I had 10 cents, 7 of those is in the US right now.
Yep, and I'm right now looking at it right now, Steve. I'm about to move some money into Japan. I think I liked your answer there.
Yeah, I think one of the ETFs I believe was EWJ. I used to love playing around with. Um, Japan is a good area. You've got a new prime minister. I think she's about to be sworn in or
And
voted
meet
in.
with President Trump this weekend. And I will say EWJ is the iShares Japan ETF. I've used it a lot in the past also, Mr. Flanagan.
Yep. So, you could have some very positive news here. We did talk 153 was my objective. We've hit it. Presently around the 52, 80, 90 level. I'm watching it carefully. I need a break of a 153, 10, 20 level to really confirm the next leg of the move. Ultimately, 153, 155 would be probably a good area to exit dollar yen longs and begin to look for that long yen play, Steve, if our scenario here is correct.
Ooh, I don't want long yen. I want short yen. I want more sushi and sake,
Steve
my
wants
man.
more sushi, Steve, and thank you, Ida. Steve
I
wants
think
more
in the
sushi.
short run, you're good, Steve. I think, I would be looking a little longer term out for dollar yen to start trading lower.
And I just bought a fund out there. For those of you who don't keeping track at home, I can tell you what fund I have. I'll put it out there. It's FIMPX. This is the fund that I bought. We don't tell anybody what to buy or sell, but we do. I do it live here on the show. I don't mess around. I tell people what I'm doing. I don't know why I was doing it twice, but
Could you repeat that again?
FIMPX. It is a mutual fund. So yeah.
The Nuveen Small Cap Growth Opportunity.
Yeah. It's a Nuveen. It's a mutual fund. So I bought some mutual funds here, and I've sold about 10% of my mutual fund portfolio off. So, Steve, I think rotation of money is probably what's happening right now.
I agree totally, Steve. It's a positional shift. People are beginning to say, is the U.S. India getting closer? Is the U.S. China getting closer? You begin to take those cards off the table. Once you begin to get China and India on the agreement side, then you turn to Mexico and Canada. What that does is it's going to open up a tremendous amount of global trading once people now know what the levels are. And I think that is a huge positive. I think the price is telling me people are beginning to shift their money and position themselves for that inevitability.
So what about LATAM and Pacific on the Pacific side? Any thoughts there on the LATAM side and the Pacific side?
LATAM is, I think, is a next level. I'm not turning my back on it. Brazil is always a great place. You just have to deal with the quickness of that market, the inflation levels. They have very high interest rates as well. I'm looking at Mexico really as my entry point into LATAM. I do like Brazil, but those are down around the 5th level on my chart. It's not one of my top levels right now that I'm looking at.
Okay, I understand. So not LATAM. What about the Pacific minus Japan?
I love Korea, Philippines, Indonesia. I think those are all great areas. I think that's more of a longer term play.
Okay.
I do like China 3 to 6 months in that play right now. Alibaba and these type of companies are going to do, very well. Again, all predicated my thesis on ironing out these trade issues. I think U.S. China, the fact that the leaders are going to meet is a huge positive. Watch these subtleties going on in China. The removal of like 8 top military guys, old guard. Every time you see the old guard, that's Xi getting more of a rubber stamp in there and getting more of his pro-business type people involved. Pro-business type people is a trade agreement because both companies will prosper. And keep in mind, China is not doing so good economically right now.
They're
They're
not doing well.
slipping.
And I think that's what people are questioning, right? Is, okay, Mr. President, maybe he's on the right path of getting away from China because China is not doing well. Maybe hitting Xi Jinping where it hurts a little bit.
I think inevitably you're going to see United States and China make a very broad agreement, and I think that the opening up of trade is going to be a tidal wave into the financial markets, because you not only will then have China and then India followed right behind, because India has to wait for China, because if India were to go first, you're going to have more problems in negotiating with China.
Okay.
And then once you turn your eyes back to Canada, Mexico, when everybody knows what the playing field is, then everybody can operate in it. Right now, the hesitancy for people to get into this market is because there's still too many moving parts, or as Howard likes to say, tweet analysis is still an integral part of trading today. If we can get trade deals done, people can trade with more certainty, and that frees up so much money that's on the sidelines. You've mentioned all the time how much money is in money market funds. I'm mentioning how much money is in the Mexican peso, sitting at 7.5%. So that all begins to release to the marketplace. You're at new highs. Could you imagine a surge of money coming in? And it won't just be the U.S. market.
I mean, 7.5 trillion on the sidelines just in the United States alone. I mean, this is a people don't really realize just how much money is sitting on this. It's astronomical. Like how much money on the sidelines, right? But that tells me that people aren't happy right now. That they're just kind of sitting there, and then a lot of what money is coming in, Steve? Is this just 401k money? Because people are losing their jobs. I mean, Target just lost 1,800 new jobs, middle management, right? We're seeing a lot of companies that are the AI space that are really helping obliterate a lot of those jobs. They're going to be stepping into their 401ks and IRAs and pulling money out. And as older people like my parents are pulled money out too, this is the same situation, right? So who's putting money in?
Well, 401ks, and if you take the baby boomers taking money out, if the markets are making new high, you're taking money out, your assets still going up, right? You're not clearing your 401k. You're taking $2,000, $3,000 a month, but your 401k is still making money because the markets are still making new highs.
Okay, but who's buying Nvidia stock at this price? Who's buying? And to me, I think it's leverage. I think it's zero DTs. I think it's algos, and I think it's leverage. I think we're the highest leverage in history. We're talking about all the way through the world history of leveraging up. Maybe not even tulips, maybe of leveraging. And to me, that seems a little high right now. Maybe I'm wrong.
No, I don't think you're wrong. I think you're absolutely right. And I think in the next 5 years, 3 years, maybe 3 to 5 years, retail is definitely getting money muscles in this market. They can take on institutional trading. You're already seeing it. Many of the institutions come out. Look at, it's always good to go back, like in an institutional booklet, and say, hey, what did they say in June? Right. They all were kind of saying the top is in, look out. Recession risks are growing. Hello, where are you? We're at new highs now in October.
I would say from my perspective that I was not saying that in June. I'm saying that now.
You're cutting edge, Steve.
I haven't heard that too often.
Woo-wee.
I mean, I get, I get people call me, a visionary, and I understand all that and the technology side of me. Okay, I get all that. But we still have to go back to old school thinking. We still have to think about it from the perspective of fundamentals. We still got to think about it as numbers. Listen, I don't understand. I get it. every adage that everybody's thinking out there, the market can be more irrational than your portfolio can stay liquid. I studied Volcker. I understand all this. Greenspan, I get it. I get
That's Livingston.
I get all that, but we still have to think about actual numbers, right? Are these companies? Apple being a $4 trillion company, I said that would be, and there we are. I said Nvidia. I was a big fan of Nvidia. Big fan of Palantir at $30. I'm not a fan of Palantir at what is it now, 180? Like, I'm not a fan of these companies when they're not making the money in order. And when I hear, oh, is earnings beat. And as I say that, Jim Cramer just tweeting Palantir to go into 200. Right? I mean, this is the
Luckily, I'm not in a position there, so it doesn't affect me like it usually does. He's usually pretty good at picking my stocks.
My God, I almost wanted to start shorting Palantir right now. It's 185.40 after he says that. I mean, this is the kind. Actually, you know what? Screw it. I can't help it. Okay, you know what? I might have to short Palantir on that. So, this is the kind of nonsense that I don't get sometimes.
Here's what I'm going to say, Steve. Real simple. I think what you're saying right now makes logical sense. However, we are beginning like a spaceship taking off from the launching pad of logic. When I talk about how much money is in the world, remember, I go back to create a thesis of since 2008's recession.
And I just showed a Palantir on the back of that. So
there has been $50 trillion plus pumped into the marketplace. And you've got so much of that money on the sidelines. In FX markets, in one day, $9.3 trillion trades. So when you ask where the money's coming from, there is money all over the place. And it is just jumping in. FOMO trading, yes. But this market is just beginning. Steve, I think by the end of 26, you and I are going to be, it doesn't make sense. I'm just buying.
Right. And Astrobot Japan just said the same thing. Like, I just mentioned that adage, right? The markets say irrational longer, they're not going to remain solvent. Not necessarily true. I can say that I'm pretty good. Life's good. But I will say that the irrationality has moved a little bit too long in the tooth for me.
And I agree with you because look at your mining stocks. Many of them don't even make money yet. Look at this 30% correction. And that makes a lot of sense. They don't make money. How could you be valuing things up here? Right. So you've got to be very selective. You've got to be looking at your Mag 7, for example. They are making money and they are expanding. You got to be looking, the one that jumped out at me, is Google. I mean, I read the other day that they've actually had incredible success on their quantum chip. Now,
yes.
That to me is like cutting edge, revolutionary stuff that could take this market by storm at some point. And then, of course, the tie up recently with who was the firm they just tied up with more money. So. Things like that. So, Steve, yes, money. It keeps coming out of the seams. It comes out of money market. It comes out of Mexico, where all this money is just sitting, getting 7.5%. I think that a lot of people have moved to cash type positions because of the uncertainty in the world, and that makes sense. But as the uncertainty thaws,
Jim Cramer.
That money's coming back.
Yeah, I just covered my short there. It was pretty heavy there, and covered my short. Thanks, Jim. And it's still going low, still going lower. It's like. But Steve, you and I remember. And by the way, folks, God, we've hit another new high, 7,500 viewers. Thank you so much out there. Look at that. Look. You and I remember back during the .com bubble, it was like everybody's so excited because it didn't matter what the hell you invested in, it went up. All right, and I got smart and got out, and I said, you know what, I'm taking my profit, I'm gonna run. And everybody, I got made fun of for 3 solid weeks, and then everybody was crying and wanting to borrow money from me 4 weeks later. So here we are again. And I wow, it does. I don't get this market, but I love the trading side of this. I'm crushing it in the trading side of this. Thank you. I mean, I understand that side of it, but it's starting to get irrational to me.
So when you refer to the .com, you and I lived through it. So the .com was basically the wiring, the internet. Today, that wiring now, it's like picking the hood up to an engine and looking at the car. There's your internet. But now you want this car to make a little bit better noise and a little more horsepower and increase the torque. You got to start getting involved into the engine. And that's where AI is. I visited a friend not too long ago when I was back up in New York visiting, and I could not believe the use of AI on the desk to listen in on a meeting, and then suddenly AI gives the minutes and all the hot topics. And that report is out within 2 minutes of the meeting finished.
And we do that here too, right? We love that, right? I mean, I'm able to pull down through AI. I'm able we have about 18 AIs here. So like all those AIs are sucking down that data faster than I can think. It actually writes it, the AI is almost writing for me now because it thinks like I do now. It understands my thought process and it writes faster. And I write it better. I go back in and fix it for what I think needs to be fixed. But it's given that date. Look at Palantir right now, folks. For those of you,
it's down almost $2 from the highs. I was about to post.
What we're talking about, Steve. I mean, companies like SoundHound, right, with all this automated ability to transcribe voice.
I mean, the days of bar fights are over because you can't argue about over a baseball game who won the game that day or what the school because. Oh, just look. Okay, tell me a little bit, Chat GPT, about what happened in the game. Oh, you know what? That's what really happened. Or we can go back and watch the video now. There's no, and I think that's what's missing in this market is that maybe we aren't going back and looking at strong, hard data from that time period and those time periods.
Bingo! Wow, Steve, you nailed it. You nailed it. The data that everybody looks back on doesn't incorporate any of this newness.
Right.
Right. We said, why is the Fed so wrong? Because they're still using data that goes back to 2020 and had a massive COVID. Every rule went out the window. Just look at your M2 money supply figure from 2020. Historically, never saw before. How can you base any sort of forward-looking model off of that type of data? It's erroneous. The data today can't necessarily look back. It's got to be so much shorter in its space. But when you begin to look back in a model on a short-term basis, what do you introduce? Massive amount of risk. Right. Because the model doesn't understand when prices then get irrational. So it's a very difficult space right now. And the institutions, I think, are missing the boat, a big time because I don't think that they're forward-looking enough, or at least their
Bank
statements.
of America now says that no rating on Papa John's, PZZA, says that they're no longer trading on fundamentals. This is what I'm talking about, Steve. This is exactly what I mean when I say that there's the fundamentals are out the door. And I was a big fan of Papa John's. I thought Papa John's was definitely beaten up. I didn't like it. But Papa John's is now $54 a share. I mean, if I look back at this, just not too long ago, it was at $40 a share back in October the 10th. That's no longer fundamentally sound now.
I kick myself all the time over DoorDash. I bought that long ago and dumped that because it wasn't moving. And look at that one,
Well done if you followed us in the Palantir short. That was I got out a little too soon, but. It's like reverse Kramer, whatever Kramer says. I mean, by the way, Phil, they don't know. I do like Jim personally. He's a great guy, great human being. Is not a bad guy at all. He's actually a really smart, really good guy. But his calls are a little too bold for me, and I'm pretty bold.
On top of all the linear regression stuff, where you just had to pull back a little bit, or should have pulled back. Bitcoin back down below 110 here, 109,960, still falling to the downside. So we are seeing some liquidations hit.
And I
there.
know you don't like it, Steve, but I'm going to mention it anyway. U.S. October, Michigan, 5-year expected inflation rising to 3.9% versus 3.7%. So they're still saying that inflation is going to continue to rise as well, not slowing down as well.
Yeah, and then I would have to ask that professor, what sort of effect are you modeling into that forecast using AI? Because AI is a massive deflationary impact.
Yeah,
in
it is.
price, into the
It's
economy.
deflationary in the fact of jobs, but it's not deflationary in the fact of energy, data centers, a lot of things that we're buying. I mean, if you talk about the president talking about manufacturing,
Pricing.
right? I would say that in the manufacturing world, manufacturing new buildings to make those data centers is going to explode over the next 2 years as they are building these data centers out. And I'm going to tell you, energy, as they move these data centers into Texas and Utah and places. I mean, hey, energy places like Louisiana, right? That's right there where the oil is right there and gas is right there. I think it's what you're going to see. Yeah.
I mean, this is the whole thing behind small modular nuclear reactors, right? You got the Army now looking at being able to have a small modular nuclear reactor that fits in a trailer truck, and you could bring that to your forward deployed base, and boom, you've got power on, you don't need anything. I just, again, Steve, technology, the future, this is all emanating out of the US here, China too, but really based in the US. Your China investment, yeah, I think that's a great idea. But the US, I think that's why I'm watching the dollar index so carefully. To me, Trump goes out and he talks 20 trillion now has been pledged to the United States. As Howard would say, show me the money.
Show me money. Yeah.
But in 2 years' time, if we're looking at a dollar index at 103, 105, we're going to be looking at this chart going, look how long it just sat along the lows, as everybody is coming in and buying back the dollar now at these levels.
But a high dollar also makes our products more expensive too.
Again, a 103, 105 is not a high dollar.
3 to 5%, 6% change. I get you.
That's
Okay.
right.
All right. So if you're not scared, you're not worried about anything in the markets, as you said, find that silver lining. Talk to me about what that silver lining is to you. Because right now, Steve, if you don't know, 8,300 people are now watching us live. So if you don't know who Steve Flanagan is the former head currency desk, forex desk of JP Morgan. We have him live here on Quasar Markets Live, talking to us about the markets and telling us exactly what he sees. I mean, 40 years. You've even got me beat on those numbers there, Steve. Although I'm still working, so I'll see if I can't get you. Yeah. Hey, Straight Talk Texas, appreciate that. Reposting the stream. We appreciate all of you out there that are reposting for us. Clicking that subscribe, and obviously in our case, signing up for quasarmarkets.com. I appreciate that. All right, Steve, let's get right to it. You said it to me on Monday. The world's not falling apart. Let's find some good things in the market, find some good things in the world. Give me that one thing that you're pinning your hat on that is the good thing that you like, that you see getting us out of it. Now, I've always said the thing that gets us out of all the messes is technology. As I say when I'm talking ahead, is tech. Steve, what is it for you?
It's tech, no doubt about it. But what I'm looking at is by the end of this month, I'm looking at a U.S.-China framework to go be further along the lines. I am looking at the agreement. I'm watching the handshake between Trump and Xi. U.S. and China.
Wait. You just said a handshake between Xi and Trump will happen?
Oh, yeah. Oh, big time. You're going to see actually, you'll get the right hand or the left hand embrace. You'll get the little hug kind of too.
Is it going to be like Macron when he doesn't let go of him either?
Oh boy, that was a really.
Are they going to make out too? I mean, they're going to kiss each other, and is this going to be like a love fest?
It benefits the entire world when the United States and China bury the hatchet and move further along on trade. And the U.S. has got to accept the fact that China is involved in this AI race with us. And we can collaborate, or we can carve out national security issues, both of us, but the world benefits by the United States and China. I think That's what I'm looking at in the near term, and that's coming up. What, next week? Is that when they're meeting?
Yeah.
We're
South
hoping.
Korea?
We're hoping that goes back and forth. But yes, this weekend he leaves for Asia, the president, and he's supposed to meet with Japan's prime minister first.
For those of you who know, I used to work in the White House, so I know all this, how this works. You're going to APEC, right? Asian Pacific Economic Council. And the APEC has meetings where there is these bilateral meetings where there are two major companies. They have trilateral with a couple, more than one. They've got all kinds of different level side meetings, but there's a major meeting. Trump is not well liked to the UN. Trump is not well liked at APEC. He's not well liked at a lot of places. But in these side meetings where there's no press, there's nobody looking at what's going on, it's just them sitting down. And in your case, you're saying they're going to hug and make out. What gets said in that meeting that both teams go, okay, let's thaw this crap out and let's have an actual discussion and let's get down to brass tacks. Take my tariffs off of me, Mr. President. Xi, relax. We'll buy your products. Stop the soybean issue in the Midwest for us. Buy our soybeans. Stop the Brazil issue. What is it that they've got to say to each other that is going to make this thaw out this problem and actually get this deal done?
Make love, not war.
Yes, but what do they need to happen?
We're back to the 60s. I love it.
I mean, I can throw the peace sign up. What is it? I mean, but there has to be some pen to paper. There's got to be some details in this. It can't be just blustering about I'm going to raise tariffs on you 500%. I'm going to drop tariffs by 3,000%. And the president, by the way, is speaking as we talk. And Palantir just dropped $1.50. What is it that they need to say to each other? Okay,
they need to drop all the posturing. That's not going to happen. But what they need to do is just start to move further down the road of opening up trade and encouraging one another. We have to recognize that the AI world is where we are both competing today at.
Right.
And we've got to figure out how we can make a safer AI for the world to utilize. We can't say, I'm not going to buy it because it's Chinese made, and I'm not going to buy it because it's US made. There's got to be a breakdown and a thawing in that. And I do believe you're going to see that. It's in both of their interests. Trump administration wants to start getting GDP growth over 4%. Yeah. China needs to get back over 5%. They're hurting right now. They need to get some stimulus in their economy. A trade agreement would be stimulus to their economy.
Are we as a country here banal to the fact that maybe China's hurting worse than we think that they are? Does he think the average person on Main Street is going, wow, we don't trade with China. China sucks right now. They're hurting. What is it that Main Street is missing with Wall Street here? Okay,
what Main Street is missing in the China story is that China is slipping into the throngs of deflation, where asset prices begin to contract. Just what happened in 2008 here, just what happened in Japan in the 90s, and it is exactly what China is looking at. If they see an asset deflation grip beginning, which is already covering them, meaning that look at their CPI, it keeps dropping every month. Housing is horrible over there.
Yeah,
their growth is dropping. You've got way more of a population. You have to create.
Is it dropping because the United States trade?
It's a ingredient. It is not the major reason.
What's the major reason?
Debt. They have to figure out how to get them. What is China's debt? Ask anybody on Main Street. Does China have debt? No, China doesn't have debt, do they?
China's debt. They have a lot of debt.
Yeah, and if you could see what the real debt of their states are, it is probably exceeding 50 trillion when the U.S. is at 37, 38 trillion. And their economy's smaller.
Yeah, their debt to ratio is 336%.
Yep. So they've got to figure out a way. Now, you could have your conspiracy theory people that say China's trying to cripple the world through debt. Okay, I buy into that. Sometimes I look at the debt issues of the world and I'm like, wow, this is a problem, a growing problem. Japan is 237%, and they're looking to go higher. But the only way out of debt is growth. And that is what I think these leaders of the world are in the process of unhatching. And that's why I'm so positive that they will grow the world out of debt. That is the only way they can do it, because to cut the debt is a recession, if not worse, across the globe.
Do you expect China to have a recession here?
No.
Do you expect the United States to have a recession?
No. I think if anything, the surprise, and again, who's going to buy the top? The surprise is going to be when things ignite. And that's why I think Trump has set all along that he has to have all this done by now. And I think by year end they have to have all these trade agreements done. Everything has to be done. Otherwise, because the focus is on the midterm elections.
Next November for the United States. Correct.
Yep. So I am very positive on the picture. I'm watching the dollar index. I think that's going to keep creeping up. I like it when it creeps, because if it moves suddenly, it destabilizes the correlation trade. Right now, the correlation trade is long U.S. equities, short the dollar. Long crypto, short the dollar. Long gold, silver, short the dollar. I like the dollar trading up, but I need it to move slowly, because if it moves rapidly, then the models have to take profit in the other ones. And when they take profit, they flood the market with sell orders.
Yeah, and they're flooding it now with sell orders right now, because we are seeing Bitcoin getting smacked here a little bit under the 110 handle here. And to me, that's not a big deal. I mean, I'm very, very long crypto, but gold 41.25 and silver pushing back up here. Man, I just want to say thank you, everybody out there. 9,200 of you right now watching us. Appreciate that. Quasar Markets Live is growing very fast. And because we're just straight talk. We just talk the way that it is. We don't sugarcoat it. We tell you what's really happening. Mainly because we've all been there. We the people that are here live it, work it, play it, and have done it many, many years. And we decided to build a platform here for you that does that for you around the world in almost every language on the planet. So if you're out there in international, and I see lots of international people signing in right now, sign up, quasarmarkets.com. You can also, and I'll put that link out there for everybody to be able to click on it real quick here. I'll do that for you. You can also look at me as well. I also have a website out there if you really want to see my background, QM BigBeat as well. You can see that. I think there's a song about me, but the appreciating and from my perspective is actually understanding the markets in a way that we understand it, Steve. So not just from the meme coins and the mean tweets out there, to actually understand what's going on. And we built that machine out there, the AIs as well, to protect us and understand that side of things. So, Steve, you are missing technology as well. You've seen the changes coming so fast. We talked about this a little bit last week. Quantum computing, obviously, and we're going to go for 10,000 here, folks. If we can hit 10,000 users or people, I love this. Let's go out there. Let's hit the number here. 9,400 of you right now. Let's go. Let's hit 10,000. We appreciate that. Steve, talk to me about the technology in the future. Quantum computing. Is it going to make a big deal difference? Is this Mark Zuckerberg spending hundreds of billions of dollars?
Well, I watched that Google comment the other day, and to me, that I am thinking that quantum computing will, if you drive a car that has 500 horsepower, that's a lot of horsepower. In quantum computing, you're driving a car that has 3,000 horsepower. And it's tame, it's drivable. But when you want to hit the gas, it can go. The difference, what I'm trying to paint, is night and day. I worry more about what the effect of quantum computing. In order to roll out quantum computing, you'd almost have to stop the entire world operating today so that everybody is on a level playing field. There are talks about quantum computing, for example, if you're in England and the United States and you want to trade on a market, you send a buy order and New York sends a buy order. But the person with quantum computing, you're subject to the speed of light at which your buy order can get to the market price.
That's right. Yeah.
But in quantum computing, you could technically eliminate all latencies in the world. So therefore, the person who gets it will have an unfair advantage, a big unfair advantage. So I'm almost like, I'm almost worried about it in the financial markets today, not to mention in crypto, where everything is supposedly encrypted. Quantum computing takes encryption and throws it on its head.
And I know you're a student of history, and I'm reading 1929.
Yeah. And
one of the things that I actually highlighted it as well, so I can remember this line. But in 1928, on the average, there was a time during those buys and those sells, heavy buys and sells, where a price of a stock wouldn't be updated for 2 to 4 hours later. Yeah. And they were making deals in the back end. They were making off market bets, right, investments about where the price would go. While today shares you can trade hands with people you don't even know around the world, anywhere in the world, you don't even know who they are making their decisions. Does the psychology, and talk about the technology, the psychology has changed? Because I am now fighting against machines. I'm also fighting against a trader in Seattle, a trader in Japan. I'm fighting against a trader in Canada, who all have a different opinion of the same stock, but still see the same data. Is psychology still the main driver of buying and selling in the markets?
It's an emotion, psychology, and emotions. That's why when you look at a chart, a technical chart, that's why you always look for peaks and valleys, because in essence, it is an emotional, psychological impact in the market. Somebody goes, I love it, I buy. Well, I love it is an emotion, and they express it by a buy. When you look at charts, look for break points, because that's where the emotion loses out. One side wins, one side loses. Keep it simple, and that's why you have break points. Yes, psychology is very important, Steve, but in the world of our subject, quantum, what happens to psychology? Psychology, it's so far behind. What you're going to end up with is that computer models will be able to actually see over the horizon. What do I mean? They'll be able to predict the next tick in the marketplace with an accuracy rate of greater than 70%. What? 70%? Could you imagine that? I know right now in 2016, 2018, there were firms out there that were able to predict at 62%. And that was phenomenal. So as technology gets better, and quantum is the next major ingredient, you'll have firms that are able to see over the horizon and predict the next tick within an incredible high accuracy rate. What does that mean? I'm thinking of buying and I'm watching the price, but somebody else has already reacted to it. So what happens? I react on their input. And you get a lot of
Elon Musk made a point. A little bit back there. Elon Musk made a point that eventually humanoids and or robots and or AI will be buying our stocks and selling for us. We won't even be doing it. They'll understand our thought process and just do all the buying and selling for us. Is that where we're going?
You already have that. Look at some of these ads. You begin to see people selling their AI model as a yeah. I mean, Steve, that's elementary stuff. To have a computer model decide.
Right.
I put in the foundation of why I want to buy, and it could be tweet. It could be recognizing that when Powell says, I immediately want to go risk adverse, so immediately buy bonds or sell this or do that. You already have those models. They've been in for a while, but now, when I begin to get a track record built up, because AI can automatically backtest over the last day or two or week that I want to have a time frame, you can automatically, run that. Why would I want to sit there and make a decision and go, I buy a stock? Okay, so when we buy stocks today, Steve, you're executing on a machine. I'm executing. What is the price, the actual price that I bought at? When you buy, it's at 37.18. Okay, great. But where did that trade get covered in the marketplace at?
Right.
And I want to know that, because if I keep sending orders in.
So are you telling me that in the future you think that we will know as buyers and sellers who we sold the position to and bought the position from?
Why shouldn't we? Why shouldn't the retail market have the transparency that the institutional markets have? Why are the institutions have privy to that market and not us? Because I can tell you, why do you think you pay no brokerage fee when you trade? Because
you're the product. Yeah.
You're the chum on the water that they sell that trade information, and that trade, they sell it to one of these big institutional traders that high frequency through the market and scalp every single one of these trades for a nickel and a dime.
That's right. They do. But how do you tell Main Street that and retail traders that they're the product?
Yeah, that's a tough one. And the only way that you can begin to show and educate is through products like Quasar Markets. And what's going to end up happening is that the marketplace needs to be transparent. This is what happened in the currency markets. Lo and behold, you don't want to hear the words from a customer that says, show me my fill.
Right.
That means I, as a bank, have to show every single tick at which that I offset that risk.
That's right. And I agree with that. And I think it's coming. Steve Flanagan, thank you so much. For those of you at Quasar Markets Live, a big update. We have hit 10,100 viewers right now. I appreciate everybody out there. It's been a great day. I will see you right back here on Monday. Steve, I will see you on Monday. And I'm looking forward to this conversation and extending it and seeing whether or not Xi Jinping and Donald Trump French kiss each other. So we'll see you right here back on Monday morning. Thanks, everybody.
Have a good weekend.